we talk about some of the largest deals that Apollo has made, good and bad, realistically, how big of a leveraged buyout transaction do you think that can be done in today's market?
Well, look, I mean, I think the El Paso deal at 7.4 billion. I mean, we had, that because there's just the availability of debt capital at that point was, maxed for that transaction. And that was over 3 billion of equity. So I'd say that was a pretty large transaction in today's environment. I think the credit markets have gotten better. Could you do an 8, 9, 10 billion dollar transaction? Probably, but I think the days of 20, 30, 40 billion are probably behind us. So that's the way I would think about that.
Yeah. A related question is the size of funds. It's all the mega firms are raising smaller funds or stay the same size at the best. Rich Friedman from Goldman said here yesterday that their next fund is probably going to be half the size or smaller. Apollo is probably coming to the market later this year for a new buyout fund. How realistically do you think how big that fund is going to be?
Yeah, so I can't talk about specific fundraisers, but I'd say that in general, the reality is that there is a cyclical overhang. There's a long-term secular shift towards alternatives, including private equity, because at the end of the day, pension funds, U.S. pension funds, and also sovereign wealth funds in their own right, with the lowering of interest rates and the U.S. Treasury being at 1% to 2%, depending on the duration, fixed income doesn't provide the type of returns that it once did, and the equity markets have been down over a decade. So, the equity market, people are scared to death of the equity market. So you're seeing alternatives grow, and alternatives as a percentage of pension assets have gone from 5 to 12. Having said that, within the context of private equity, which is in that alternatives bucket, you saw a huge amount of capital raised in 06 to 08, and there haven't been enough realizations, and so there's an overhang of private equity that's a cyclical overhang. And so, right now that cyclical overhang is limiting the amount of capital that people have to put into private equity funds. So you're going to see new funds, even for the good players, and obviously we sit with 26% net returns over a 22-year history, and in our last fund we're 23% net today. So we've really generated top-tier returns. But for everyone, there's just less capital out there, particularly in the U.S. and Europe. There are some emerging Asian and Middle Eastern players, but it's not going to offset the fact that there's this overhang. And so you'll see everyone's fund size likely coming down.